For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Shares of SoFi Technologies have risen by 5% following an announcement regarding a major personal loan transaction. The company, a prominent player in the online lending industry, revealed that it had successfully completed a personal loan securitization agreement valued at $525 million during the fourth quarter of 2024. This recent transaction is part of SoFi's ongoing efforts to expand its personal loan business and capitalize on its existing momentum. This prior investment underscores the confidence that major financial institutions have in SoFi's capabilities and the strength of its lending platform. SoFi Technologies emphasized that the latest personal loan agreement builds upon the company's extensive history of loan securitization. To date, the company has sold or securitized a total of $3.9 billion in personal loan collateral through the end of quarter 3 in 2024. This accomplishment highlights the robustness and growing value of SoFi's personal loan segment, which has become a cornerstone of its financial services offerings. Financial analysts from Keefe, Bruyette & Woods, a boutique investment bank, expressed a favorable view of the recent deal. They noted that this transaction reflects ongoing demand for SoFi's diverse range of loan products, further solidifying the company's position as a leading financial technology provider. SoFi Technologies has built its reputation on offering a wide variety of financial solutions to its clients, including personal loans, mortgages, credit cards, and other banking services. Over the past 12 months, SoFi Technologies has delivered exceptional performance in the stock market. Its share price has increased by an impressive 115% during this period, positioning the company as one of the standout performers in the financial technology sector. This growth has not gone unnoticed by analysts, many of whom have raised their ratings and price targets for the stock. Analysts largely attribute SoFi's success to favorable macroeconomic conditions, including the prospect of lower interest rates, which are expected to drive increased demand for its lending products. Despite its strong performance, SoFi Technologies stock currently holds a consensus hold rating among 15 Wall Street analysts. This rating comprises 6 buy recommendations, 5 hold recommendations, and 4 sell recommendations that have been issued in the past 3 months. The average price target for the stock is $13.19, which suggests a potential downside risk of approximately 18.93% from its current price level. Looking toward the company's upcoming earnings report for the quarter ending December 2024, market expectations are high. Analysts predict that SoFi will report a significant year-over-year improvement in earnings bolstered by higher revenues. However, the most critical factor for the stock's near-term performance will be how the actual results compare to these forecasts. If the company exceeds expectations, its stock price may see a further boost. Conversely, if the results fall short, the stock could experience a decline. The company is set to release its earnings report on January 27th. For the upcoming quarter, SoFi is projected to report earnings of 4 cents per share, which would represent a 100% increase compared to the same quarter last year. Meanwhile, revenue is expected to reach $664.04 million, reflecting an increase of 11.7% from the previous year. It is worth noting that analysts have revised their earnings estimates for SoFi Technologies downward by 1.3% over the past 30 days. This adjustment highlights the fluid nature of earnings projections, as analysts continually reassess their models based on new information and market conditions. To better understand the likelihood of an earnings surprise, investors often turn to predictive models such as Zacks Earnings Expected Surprise Prediction. This proprietary model compares the most accurate estimate for a company's earnings to the consensus estimate for the quarter. For SoFi, the most accurate estimate currently exceeds the Zacks consensus estimate, resulting in an earnings expected surprise prediction of over 4.97%. This positive reading suggests that analysts have recently become more optimistic about SoFi's earnings prospects. The company also holds a Zacks rank of number 2, indicating a buy rating. Historical data shows that stocks with a combination of positive earnings expected surprise, prediction, and a Zacks rank between 1 and 3 have a strong likelihood of delivering earnings surprises. In fact, these stocks tend to exceed earnings forecasts nearly 70% of the time, further enhancing their appeal to investors. For the previous quarter, SoFi Technologies had been expected to report earnings of 4 cents per share, but surpassed this expectation by delivering earnings of 5 cents per share. This performance represented a surprise of over 25%, underscoring the company's ability to consistently outperform market expectations. It is important to recognize that an earnings beat does not always guarantee an increase in a stock's price. Various factors such as broader market trends and unforeseen catalysts can influence investor sentiment and stock performance. Similarly, stocks may experience gains despite missing earnings estimates due to positive developments or announcements that overshadow the earnings results. For investors, betting on stocks that are likely to exceed earnings expectations can improve the chances of success. Tools such as Zacks Earnings Expected Surprise Prediction and Zacks Rank provide valuable insights into a company's earnings potential and can help identify opportunities in the market. However, it is equally essential to consider other factors, including the company's overall business strategy, market conditions, and management's commentary during earnings calls. SoFi Technologies appears to be a strong candidate for an earnings beat in its upcoming report. While this is an encouraging sign, investors should conduct a thorough analysis of all relevant factors before making any investment decisions. Understanding the broader context in which a company operates can provide a clearer picture of its potential for long-term success. In the end, SoFi Technologies has seen its stock price rise by 5% after securing a $525 million personal loan securitization deal. This builds on the $3.9 billion in personal loan collateral sold or securitized by the end of Q3, demonstrating the strength of its lending business. Analysts view the transaction positively, citing sustained demand for SoFi's financial products. Over the past year, the company's stock has surged by 115%, with analysts attributing its growth to expectations of lower interest rates driving loan demand. SoFi is projected to report quarterly earnings of 4 cents per share, representing a 100% year-over-year increase, and revenues of $664.04 million, up 11.7%, with an earnings expected surprise prediction of over 4.97% and a Zacks rank of number 2. The company is poised for a potential earnings beat when it releases its results on January 27, although broader market factors and investor sentiment may still influence its stock performance. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.